Hello, money things in the world on a Friday. Let's have a look. Opening chart is, if you follow the link, you get to this, I think it's 4FX Street or something, and they open a 4 block of different currency crosses for you, and you can do the drop down and change which ones you want. And it's got gold and silver in there as well. It's quite a natty little thing to have. And this is to point out the absolute berserkness that went on last night with the Jappy, the Japanese yen. The two charts on the left is Euro versus Jappy at the top and US dollar versus Jappy at the bottom. If we go for the US dollar Jappy, it was 80, leapt down to under 77, which is a monstrous great leap. And I think it's the strongest Jappy read since the Second World War. So we ask ourselves, well, why is the Japanese yen getting strong when the country is getting whacked? And I just add something that I keep adding always, because the world is complicated. The financial press have been trying to say it's because of Japanese insurers having to liquidate assets so they can get yen to pay out people in insurance. But nah, certainly doesn't account for that sort of leap last night. Look over the top right hand and you've got the US dollar versus the Swiss franc, the Swissy. And it does a similar sort of hey up. And we ask ourselves, why would the US dollar Swissy do a hey up when it's the Japanese yen that's in question? And just to stress the point, that's AG, so that's silver, isn't it, at the bottom? And that does a hey up as well. It's probably all to do with computers linked up and all that sort of thing. But it wasn't just a Japanese yen factor. But it probably kicked off in Japan and made all the computers go up. And I'll just say, it's interesting to watch these, to have an eye on some of these sometimes, just to have it open and keep an eye on them. At the time of the flash crash, when the stock market dropped down nearly 10% and went back up again, and they said it was fat fingers and all that sort of stuff and computers out of control. It was hours beforehand the Forex markets were going berserk. It wasn't just a flash crash. In the equity markets, all the markets were up. They were really turmoiled. So it's a natty little link that to have, and you can change the crosses that you want in each of your 4 boxes. Anyway, moving on. Let's move to inflation. I'll use the word, although we have different ideas what we mean by inflation. Different people do. But this is the United States, and the top chart there is export price index. And you can see that goes, the trend line is from June 2010 to February 2011, kind of like now. And the trend line takes it from 3.7 up to 8.6%. Export prices going up. The bottom is import prices, and we can see from September to February 11 now, from 3.6 to 6.1, 6.9. Import prices going up. It's a trend. It's a trend. The BLS released its data yesterday, and it's this. I've highlighted foods, energy, and except foods and energy. Now, if we follow down foods, we'll get an idea of the sort of number that we should be looking at getting. And we start with 0.5, 2.5, minus 0.2. There's a minus 2.5 in there, but generally we're looking at 0 point and then just a single digit 5, 6, 0.5, 6, 7 or something like that. January was 0.3 and then way up, plus 3.9 for foods, BLS, PPI up. Energy, and you can get the similar idea, it starts at minus 2.3. There's some bigger numbers coming later in the data. January was 1.8 and we've got a leap up to 3.3. But it's all right. There really is no inflation out there in the real world, because except foods and energy, and that's what serious economists take for their inflation metric, it's stagnant, down in the 0 point very, very littles. It's come down from 0.5 in January down to 0.2. So there is no inflation really out there. Good. Right, this is Denninger writing on that same data release by the BLS. And he says, we must, in his special Denninger, that's what he calls himself, Denninger, in his special Denninger voice, we must recognize the underlying facts. Excess capacity in the economy is not a function of some transitory nonsense. It is, rather, the result of massive Ponzi-style financial game playing and cannot be sustained. The private sector cannot recover and return to health until and unless the government withdraws the artificial support and allows those firms that are insolvent to be recognized as insolvent, clearing the bad debts from the system. Now, this is what Denninger and quite a lot of Austrians and, well, quite a lot of people actually think is the best thing to do. Remember the charts yesterday, which were the three tall red government spending charts, and I say, well, what would have happened if the government didn't do those three big government spending bars up? That sort of thing would happen. You would get firms that are insolvent would be recognised as insolvent. They would be cleared. Bad debts would be cleared from the system, and a restart could happen if there was anything left. But the authorities don't have what it takes to let that happen, and will never have what it takes to let that happen. It will be forced upon them or nothing. Right, FT Tilt, which is a new thing. If you want to have a look, follow it and subscribe. I haven't really got into it yet, and they might not have got into their stride, but it's a new app. I don't know what the app is, from the Financial Times. The first one is Following the Money. Bank of America appoints Ambani on the board. Bank of America Ambani. Mukesh Ambani, India's wealthiest man, has just been named to the board of Bank of America. Bank of America will benefit from the global perspective of Ambani, whose diversified business interests include oil, gas, retail, and information and communications. They'll benefit from that and other things. Tilt again, China puts brakes on nuke program and sparks a major sell-off. Hong Kong listed Dongfang Electric, Harbin Power and Shanghai Electric, China's largest nuclear power equipment makers, fell 6 to 10% in early trading Thursday after the country's state council suspended the approval process for new nuclear power plants and decided to conduct safety inspections of those under construction. As the FT noted, China's decision to put the brakes on its ambitious nuclear program is both unexpected and uncharacteristic, and reflects widespread fears about the Fukushima crisis. Even the Chinese government knowing what the people would be thinking. This is a run of Telegraph articles about the United Kingdom. The first is OECD cuts growth forecast for Britain. Britain's economy faces significant risks from weak domestic consumption, falling house prices, fiscal consolidation and uncertain global demand, the OECD said as it cut its growth forecast for 2011. Next is the Telegraph. Unemployment surges to 17-year high. Unemployment has reached a 17-year high of more than 2.5 million, and youth joblessness is at record levels, official statistics showed. And another one, Telegraph, nearly 1 million over 65s are forced to carry on working. The number of over 65s in work has risen to nearly 1 million, suggesting an increasing number of people cannot afford to retire in the current climate. And I read a report, and it was very, very odd, that it seems, because I know in the United States generally it has been the men that have been laid off and are struggling to get back into the workforce. In Britain, it's the other way around. The women are being laid off and are struggling to get back into the workforce, and it's men that are holding on to their jobs and getting any new jobs that are available. And not just that, but older men are, I think they've caught on, the Brits, that older men with their experience, if you can pick them up cheap, are good value. Moving on. Telegraph. First-time buyers offered £70,000 deposits by local councils. I read this and went, you what? First-time buyers are being offered deposits of up to £70,000 by their local council to help them on the property ladder, with taxpayers footing the bill if house prices fall. The controversial new mortgage deal is being launched by 5 local authorities and backed by Lloyds Banking Group, which is one of the lenders bailed out by the taxpayer during the crisis. So this is government pushed, I would say, pushing Lloyds into this. I would hope anyway. Although it's no skin off Lloyds' nose, they lend the money, and it looks like the local council will take the risk. The scheme is aimed at struggling first-time buyers who are unable to afford the large deposits required by lenders concerned about borrowers defaulting on their home loans. Under the scheme, a buyer could potentially purchase a home for £350,000 with a 20% deposit from their local council of £70,000 and a 5% deposit from their own savings. Together, this would provide the 25% deposit required by lenders to secure a preferential rate on their mortgage. It's this, how do you get first-time buyers into the market? How do you get them? You ask Denninger. You let things fall to the level that they want to fall to. If they're not supported by government, local government, etc., shenanigans. Or not. Anyway, let's finish, I think it's the weekend, with this chart, which is Saudi Arabia oil production. This chap's got different, his information from different places and plotted them all on the chart, but they seem to follow each other, so we can be pretty sure that this is what they are. And taking into account that there's increasing usage in Saudi Arabia, so exports are actually going down through this period, which goes back to 1995, and you can see that they've got to 9.5 million barrels a day quite a few times, 2003, 2005, 6 and 2008. And it's really increasing up at the moment, as I said, before the Libyan crisis, and they might be able to go up to 9.5 again. But the general number quoted to give the cushion for oil supplies is that they can pump up to 12.5. And looking at that chart, we kind of go, no, they can't. 9.5 max. Anyway, that's it. I'm away for the weekend, and I'll see you next week for World Economic News. Bye.